Hi, my name is Stephen Leaf. My metric number is A20A2035. Here I would like to present course AFT 2073 Financial Management. Financial management means planning, organizing, directing, and controlling the financial activities such as procurement and utilization of funds of the enterprise. The financial manager is charged of maximizing profit in both the short and long run of the business. The objectives are improve efficiently, and financial management is also benefit in increase the efficiency of all sections and departments of the organization. In this AFT 2073 financial management study, our group was tasked to analyze two companies financed from the same type of the industry. We select company are Bonia and Padini, which focus on selling clothes. All information need to prepare a finance radio for these two companies have been obtained from the website Malaysia for the 3 years from 2019 until 2021. The analysis was done horizontally and vertically for the 3 years for company Bonia and company Padini. That's all for me. Thank you.
Hi and Assalamualaikum. My name is Aisyah binti Muhammad. My matrix card number is A20A1255. Today, I would like to discuss about business nature of the company. We choose two companies, that is Pandini and Bonia. Business nature of company for Pandini is in 1971, Pandini began operating as the whole apparel and manufacture company. Pandini has been involved in wholesale and garment manufacture. Next, in 1981, the brand Wiki under Pandini has also been launched. In 1987, the Mickey brand was launched. In total, Pandini has over 150 stores in Malaysia and various markets around the world. In 2004, the main board was included. Pandini Holding has moved its listing and quotation to the main board of the Kuala Lumpur Stock Exchange. Next, about business nature of company Bonia. Bonia's story begins in 1974 with a young man named Chiang Sang Sam. He has a vision for the future. Thus was created the Bonia brand, which complete a collection of seasonal bag, accessory, shoes, and watch. In 1978, Bonia has entered Malaysia department store during the heyday of the retailing channel. In 1988, Bonia opened its first boutique in Kuala Lumpur, Malaysia, and in 1919, Bonia entered department store in Indonesia, Hong Kong, Brunei, and Taiwan. In 2003, Bonia entered the Thailand market, and in 2008, A2 800 square foot flagship store opened at the Kuala Lumpur Pavilion. That's all from me. Thank you.
The first one of financial ratio is liquidity ratio. It is measuring the ability of a business to make various types of payment to other parties. First one of liquidity ratio is current ratio. The current ratio is when the current asset divided by the current liabilities. Based on the table, we can see that the current ratio for company Bonia in 2019 is 3.06, and it decreased a bit in 2020 and it increased back in 2021. We can conclude that the current ratio is better than previous year for company Bonia. Next, the asset test ratio is when the current asset minus inventory and divided by current liability. The asset test ratio for company Bonia in 2019 is 2.0, and it decreased in 2020 and it increased back in 2021. We can conclude that the asset test ratio is become better than previous year for company Bonia. The net working capital is when current assets minus current liability. The net working capital for company Bonia in 2019 is almost 181 million ringgit, and it decreased in 2020 and it decreased continuous in 2021. We can conclude that the net working capital in these 3 years getting worse for company Bonia.
The next part is about inventory turnover for Bonia and Padini company for 3 years. We can see that Bonia company has experienced fluctuation for these 3 years, but for 2020 to 2021, company Bonia has increased in terms of its inventory turnover. Different for Padini company, which are experiencing a decreasing in 2021. For the average collection period, company Bonia has a continuous increase for 3 years. This means that the company Bonia has a weak debt collection ability, as well as the Padini company. For the account receivable turnover, company Bonia experienced a decrease from 2019 to 2020 and remained in 2021. In contrast to company Padini, Padini experienced a decrease for 3 consecutive years for account receivable turnover. Fixed asset turnover for both company, which is Bonia and Padini, has experienced a decreasing for 3 consecutive years. It can be concluded that these two companies has getting a worse fixed asset turnover. Total asset turnover also decreasing for these two companies in past 3 years. It can be concluded that Bonia and Padini company has the worst total asset turnover.
The third ratio is leverage ratio. It is measuring the firm's ability to manage debt. The first in leverage ratio is debt ratio. It is when total debt divided by total asset. The debt ratio for company Bonia in 2019 is 25.66%. And it increased in 2020 and it increased continuous in 2021. We can conclude that the company Bonia in these 3 years is getting lower to cover debt. The debt to equity is when total debt divided by total equity. Debt to equity for company Bonia in 2019 is 34.52% and it increased in 2020 and it increased continuous in 2021. We can conclude that company Bonia become lower than previous year for ability to cover debt.
The next section is about profitability ratio. So first is about the gross profit margins by using formula gross profit divided by sales. So from here we can find that the result for the company Bonia and Padini have the same situation, which is it increased and then continued decrease at the slight rate. Therefore, we can conclude that in overall, company Bonia and company Padini have an excellent gross profit balance after paying for the production costs, which is your GS. And continue with operation profit margins by using earning before interest and tax divided by sales. From here, we can find that for the result for the company Bonia is decreased and it managed to achieve a good percentage. Therefore, it can be concluded that the company Bonia is getting better. And for the result for company Padini, it has been decreased for that 3 years. Therefore, it can conclude that the result operation profit margin for company Padini is getting worse during that 3 years. Next is net profit margin by using the formula earning after tax divided by sales. So for the result, company Bonia, it can be found that it has been decreased and it managed to achieve a good record percentage value in that 3 years. Therefore, it can be concluded that the result for net profit margins from company Bonia is getting better during that 3 years. And for the result, company Padini, it has been decreased during that 3 years. Therefore, it can be concluded that the result net profit margin from company Padini is getting worse during that 3 years. Continue with return on asset by using the formula earning after tax divided by total asset. So for here, the result for company Bonia has been decreased and continued increase. Therefore, it can be concluded that the company Bonia has been getting better than the previous year. While for the company Padini, it has been decreased for that 3 years. Therefore, it can be concluded that the company Padini is getting worse during that 3 years. Anyways, the return on equity by using earning after tax divided by total equity. The result for the company Bonia has shown that it has been decreased and continued increase during the next 3 years. Therefore, it can be concluded that the result return on equity from company Bonia is getting better than the previous year. Well, for the company Padini has been decreased during that 3 years. Therefore, it can be concluded that the result return on equity from company Padini is getting worse during that 3 years.
Current ratio for company Bonia in 2019 is 3.92, and it increased in 2020 and it increased continuous in 2021. We can conclude that the company Padini is good in fulfilling their short-term debt. As a conclude, the company Padini is better than company Bonia in terms of ability to pay short-term application on time. The asset test ratio for company Padini in 2019 is 2.58, and it increased in 2020 and it increased continuous in 2021. We can conclude that the asset test ratio is good in satisfying their short-term obligation by company Padini. As a conclude, the company Padini is better than company Bonia in terms of ability to pay its short-term obligation without counting on inventories. Net working capital for company Padini in 2019 is 602 million ringgit, and it decreased in 2020 and it increased back in 2021. We can conclude that the net working capital is better than the previous year for company Padini. As a conclude, the company Padini is better than company Bonia in terms of ability to finance current liability in minimal time.
2019 until 2021, the inventory turnover of company Padini is higher than company Bonia. This means that company Padini is better than company Bonia in terms of the effective in inventory to generate the sale. In this 3 years, 2019 until 2021, the average collection period of company Padini is higher than company Bonia. This means the company Padini is better than company Bonia in terms of collecting debt. In this 3 years, 2019 until 2021, the account receivable turnover of company Padini is higher than company Bonia. This means the company Padini is better than company Bonia in terms of effective in collecting receivable. In 2019 until 2021, the fixed asset turnover of company Padini is higher than company Bonia. This means that company Padini is better than company Bonia in terms of the asset to generate the sale. Total asset turnover of company Padini is higher than company Bonia in these 3 years. This means that company Padini is better than company Bonia in using a total asset to generate the sale.
The debt ratio for company Padini in 2019 is 22.52%, and it increased in 2020 and it decreased in 2021. We can conclude that the debt ratio is better than previous year for company Padini. As a conclude, company Padini is better than company Bonia in terms of ability to manage debt from total assets. Debt to equity for company Padini in 2019 is 29.07%, and it increased in 2020 and it decreased in 2021. We can conclude that the company Padini is getting better than previous year to finance debt. As a conclude, company Padini is better than company Bonia in terms of ability to finance the debt from total equity.
Continue with vertical analysis for profitability ratio. The first is gross profit margin. So from here we can find that the result for company Bonia is higher than the company Padini in terms of their percentage for the year 2019, 2020 and also 2021. Therefore, we can conclude that the company Bonia is better than the company Padini in terms of generate a gross profit from its sales from that 3 years. Continue with operation profit margins. From here, we can find that the result percentage for the company Padini is higher than the company Bonia for the year 2019 and 2020. Therefore, we can conclude that the company Padini is better than the company Bonia in terms of earnings of operation income before interest and tax from its sales. Well, for the 2021, we found that the company Borneo is higher than the company Padini in terms of their percentage. Therefore, we can conclude that the company Borneo is better than the company Padini in terms of earning operation income before interest and tax from its sales. Next, net profit margins. From here, we can find that the result for the company Padini is higher than the company Borneo in terms of their percentage for the year 2019 and 2020. That's why we can conclude that the company Padini is better than the company Borneo in terms of generate net income from its sales. While for the year 2021, the result percentage of the company Borneo is higher than the company Padini. That's why we can conclude that the company Borneo is better than the company Padini in terms of generate net income from its sales. Next, return on assets. From here, we can find that the result percentage for the company Padini is higher than the company Borneo in years 2019, 2020s, and 2021s. Therefore, we can conclude that the company Padini is better than the company Borneo in its ability to generate profit through all assets owned by its company. For the lastly is return on equity. From here, we can find that the company Padini is higher than the company Borneo in terms of their percentage for the year 2019, 2020, and also 2021. Therefore, this means that the company Padini is better than the company Borneo in generate returns on its investment that it received for the company shareholders for that 3 years.
Hi madam, I am Somchan, daughter of Somchan, my metric number A20820004. Today I will discuss about recommendation and conclusion. Let's we discuss about recommendation first. For recommendation, we want an analysis before making any recommendation or selection. We use the ratio analysis to pinpoint advantages and disadvantages to find which is alternative and initiative are possible. By using the financial ratio, our company able to compare and evaluate its performance with the competitor regarding liquidity, profitability, operational efficiency, and others. These insights can provide indicators of organization performance and making more precise recommendations. Thus, based on the analysis, we recommend the Padini because the company has a higher liquidity ratio, the overall ratio is liquidity ratio. Liquidity ratio is important to determine the capability of a company to pay off debt obligation in a short term without rising and external capital. Padini has significantly increased in liquidity ratio throughout the 3 years in current ratio, quick ratio, and net working capital. The result shows that Padini has the ability to pay off debt obligation. However, Borneo when struggling and cannot fully pay off the current liabilities because had a problem in justifying their current liability without really on investors and the company has lower than 1 in quick ratio. Thus, one way to able to pay off current debt is negotiating for longer period of payment with debtors in order to avoid negative result liquidity ratio. The second ratio is activity ratio. Function of activity ratio is to measure the efficiency of asset to generate sales. Padini has getting worse compared Bonia in activity ratio except fixed asset turnover. How to get business better and grow? Okay, to get better business and grow, the company need to focus more about inventory because to get higher sale. The third ratio is leverage ratio or solvency that we call it. Function to use measure the firm ability to manage debt. Padini has getting better compared Bonia, but not overall. To get the good formability, the company has managed cost debt carefully. The company need to focus more and effectively about the percentage of debt of ratios such as add more assets. Last one is profitability ratio. Function of profitability ratio is indicates the ability of the company to generate profits. Profitability ratio analysis is a good tool to measure company performance, which is important especially for stakeholders and creditors. Bonia often a higher profitability ratio compared to Padini, except in gross profit margin. To boost the profit, The company has to manage costs effectively, and the company need to focus on risk areas such as reducing excess staff. This can decrease operating costs and increase productivity. In conclusion, we compare our business with other company which also in the fashion and costing industry to evaluate and find alternative performance company. Financial analysis which includes on the 15 ratios and retail and need to be focused on in order to avoid unnecessarily financial problems. In addition, a company needs to gain a higher in liquidity ratio to have a stable financial health. However, the lower activity is equity ratio, leverage ratio or solvency, and profitability ratio is the lower financial risk of the company. These all are the key aspect for stakeholder and creditor to have visual financial performance. Therefore, to attract stakeholder to invest, the company should have a good financial analysis. That's all for me. Thank you.